Hi everyone, Nikolai here. It's day one at IFX Expo in Dubai. I think you've already had some time to kind of survey the area, meet with people at the event. What are your impressions so far of the show and, kind of what's going on?
Well, we started attending some of the retail conferences and exhibitions about a year ago. This is one of the larger ones I've been to. And definitely get the sense that this is an industry that's growing quite fast, which is really driven by the explosion we've seen in the last couple of years in the number of retail traders globally. It's just growing and growing.
And can you give us a little bit of background about your companies? As far as I understand, you guys originally started your business and it was focused more on, I think, hedge funds, and now you're venturing into like different new segments in the industry?
Yes, absolutely. So myself and my co-founder Christian, we started life and we spent 20 years or so as portfolio managers at quite large household name hedge funds. And after the financial crisis, we became pretty convinced that given the amount of data that's now available about what's going on in the world and the global economy and inflation and China and all the rest of it, and the incredible cheapness of computing power, there was an opportunity to apply machine learning and data analytics to the world of macro. And we were always very frustrated by macro because the world of macro tends to be the world of stories. Everyone has an opinion. All the opinions are equally valid and equally worthless. And so we really wanted to start asking the data what was really going on in markets. And so we built a solution for the institutional world, and over the last 4 to 5 years, we now have some of the world's largest asset managers and hedge funds as our clients. I think the AUM of all our clients is something like $2.5 trillion. So we really have a lot of very big, well-established institutions as hedge funds. And we started looking at the retail market a couple of years ago, and one of the things that really shocked us was that something like 65 to 85% of retail traders lose money. In fact, the average life of a retail account is about 6 months, from the time it's open to the time it hits zero. And the institutional world is very well aware of the value of quality market intelligence, and that's why they tend to keep it to themselves. And so I guess we see ourselves a little bit as part of this whole democratization wave now, and our mission is to take these quite sophisticated analytics but then simplify them, make them very intuitive, and deliver them for the price of a cup of coffee to the retail trading world.
And speaking about the retail trading side of things, I mean, there's a huge boom right now internationally, especially with young people who have disposable income to start trading. And I think you alluded to it. What do you think are some of the challenges that the retail industry is going through in terms of the fact that there's just this huge rush of people who are looking to invest a quick buck, essentially?
Yeah, I mean, if you look at the numbers, just to start with that, in 2015, our research indicates there were probably about 250 million online trading accounts. As of 2021, we think that's now more like 450 million. So we've seen some enormous growth. If you look at the growth, it's clearly, particularly in the US, been driven by millennials and Gen Z. And if you look at, and we've done quite a bit of research, the kind of typical profile of the online trader in the US, they tend to be university educated, they tend to be particularly interested in technology and finance, they tend to be gamers, you'll find them on Discord, and they are very interested as well in developing their online personas, and anything that makes them look smart, they embrace. So you've seen that. Now, one of the drivers of that has been crypto. And there's no doubt that the gateway to broader financial markets has been crypto. Crypto got people into trading. And now they're spreading their wings and looking at meme stocks and all sorts of other things. The big challenge is that easy access. And the incredible thing is you can now pick up your phone and in 5 minutes you can have an online trading account. I even saw somebody here on some brochure say you can You can use Apple Pay to put your deposit. So literally in 5 minutes, you've got access to the world's markets. The problem is that access without knowledge is a problem. And I think the challenge for the industry is trying to get it onto a sustainable footing. And an industry where 65 to 85% of your clients lose money is not sustainable. It's just going to churn and replace, and eventually you'll run out of people who are going to, keep losing money. And so we think there's a place for quality analytics. And I'm not really talking about another technical package. What we do is taking a lot of high quality data about fundamental data around inflation, central bank expectations. We bring in data that gives you daily real GDP estimates for about 20 countries. Our data bill is enormous. Use a lot of cloud-based processing and algorithms, working with some academics at Harvard, Princeton, and Cambridge we've been working with over the years to really reveal what's driving asset prices. And given all the information about the Fed and about inflation, what are the probabilities of these asset prices moving up or down, and with what confidence can the model say this? And so we cover 6,000 instruments, and I think there are other simple things that we can bring to the table, such as if you have a stop loss, you can actually, it's not that hard to calculate the probability of being stopped out within 24 hours. And so if you want to buy S&P 500 at 4,800, and you say to yourself, okay, I'll risk $100 on this trade, so I'll put my stop 20 points away. Well, given the volatility of that asset, you can actually calculate the probability of hitting that stop within the next 24 hours could be 60%, could be 40%. And, traders who come into trading, I think one of the common mistakes is they're setting their stops much too tight. They've got leverage. I saw one leaflet here which said, 100 to 1 leverage. And so that's just a recipe for everyone getting stopped out all the time and constantly losing money. And so I think there's a lot of things that the institutional kind of field can bring to the retail trader to help across everything: risk management, trade ideas, opportunities, risks, you name it.
And can we talk a little bit about the IQ by QI solution?
Yeah.
Is that sort of what you were alluding to before, or is it a little something different?
Yeah, so we've launched a retail brand called IQ by QI, and this is a set of analytics that do a few things. Number one, what are the big thematic drivers of markets right now? And this isn't an opinion, it's actually interrogating large amounts of data to tell you, what is it really the Fed hiking rates that's caused the drop in the S&P 500 in the last 2 weeks, or is it something else? Is Tesla really a micro meme trade, or is it trading off corporate credit costs or whatever it might be? So that's one aspect. Another aspect is we can measure, based on all the information available, whether there is a bullish or bearish leaning for a particular asset, and we cover pretty much everything. And so that's a second guide for the retail trader. And then some risk management tools like the stop loss calculator I mentioned. And those are currently available as kind of emails and content. In about 6 weeks, we'll have a API available, and later on this year, we'll be going direct to the retail universe. So right now, we're actually going to online brokers, saying, one of your challenges is improving the education that you have on your site, improving the analytics you have to attract your client base. And so that's phase one, and phase two is going to be going direct to the retail trader with our apps and all the rest of it.
So could we expect that at some point brokers will be able to integrate your service into their trading platform? And so essentially...
Yes, that'll be by this, within a couple of months. I see. And then we'll have direct products towards the end of the year.
I see. And regarding the... about the probability of being stopped out, is that something that will be included something?
Yeah, that's coming soon.
Awesome. What do you think are the key trends to watch out for in 2022? Just FX, yeah, market-wise, FX.
So market-wise, if we look at what QI has been spitting out, what the main headline message is markets are going to be much tougher this year than they were in the last couple of years. In the last couple of years, there was enormous fiscal stimulus, enormous monetary stimulus, massively negative real rates. And if we take, for example, the S&P 500, the things to watch out for is if real rates continue to rise, if inflation moves lower, and critically, if corporate credit borrowing costs continue to rise, and they have been in the last couple of weeks, that's going to be quite negative for global equity markets. So I think it's going to be a more volatile and much tougher environment based on what we see under the surface, looking at all the data.
Gotcha. Well, Mahmood, thank you so much for joining me. I hope you have a great rest of the conference, and we hope to see you soon.
Thanks a lot.
Thank you.